We stay on developing countries. It's a historic first for the Philippines. Fitch Ratings giving the country the first ever investment grade rating. That upgrade gives greater access to low-cost loans. Fitch raised the Philippines' long-term foreign currency debt to BBB minus. The local currency also got a boost as well. The agency cites the country's strong trade balance numbers and the current account surplus for the upgrade. They also praise the country on reforms in fiscal management and also in raising taxes. And for more on this story and the Philippines and the surprising economy of late, Ryan Hakim joins us from New York. He's an economist with Cascade Asia Advisors. Welcome to the show, Ryan. I wanted to ask you, on this particular topic, this upgrade is significant, but for our viewers around the world, help them understand why is it important that it was upgraded to investment grade status?
Well, actually, in terms of for the Philippines, we've actually been expecting this for a long time, and I think the markets actually understand that as well. And I think you can look at this from two things. One is the yield, which has already been falling, and if you look at the credit default swap spread, that's also been trading quite tight compared to other investment-grade countries already. So I think for the immediate term, nothing is really going to change. I think maybe after the elections in May, you'll start to see those effects materialize in terms of borrowing costs.
So what you're saying is the economy has already gotten better. Investors already know that.
Yeah, I think the market's already realized.
Expected this rating. But how's the economy in the Philippines? You cover that sector quite closely. Is it an economy that needs more assistance to drive it further, or is it self-sustaining at this point?
Well, I think if you look at the market, the Philippine Stock Exchange, for example, that's been one of the best performing in the world. I think one of the drawbacks in the Philippines for investors is the political situation. And I think that's why maybe the S&P and Moody's will probably hold off until sometime after the May elections to upgrade the Philippines. And I think it's because of the traditional bottlenecks that you've always had for investment, especially with dispute resolution and with royalties. I think in terms of FDI, investors are still quite wary. But if you look at portfolio inflows in the country, I think everyone's already realizing that the fundamentals in the country are actually quite strong.
You mentioned this earlier. The stock market there is doing well. It's getting upgraded by Fitch. Yes, there's concerns about the politics side of it, but investors like yourself, why are they so attracted to the Philippines? I mean, there's plenty of choices in Asia.
Right. Well, one is the market, the stock exchange. Two is the interest rate differential is still quite attractive compared to other countries, other emerging markets. And for the Philippines, I think they're going to keep rates on hold for the rest of the year. And so I think investors still look at the Philippines as a place where they can get pretty good returns for their portfolio investments.
Okay, so let's take a step back. We've been fairly positive on the Philippines. What are some things that perhaps could derail growth, maybe not just in the Philippines, but throughout Southeast Asia? I mean, there's some significant issues happening around the world. Although they're far from the Philippines, could they perhaps have a macro impact?
Yeah, I think for Fitch, I think one of the assumptions that they had was there was going to be no external impact to the Philippines. And, speaking of things like the Eurozone, but I think for the Philippines, relative to other Southeast Asian countries, it's actually quite insulated. There's a lot of exposures to the U.S., but not so much to China, where you might be experiencing some slowdowns. So I think in terms of the external macro environment, I think the Philippines is still quite strong.
I'm just curious, is the Chinese economy at all related to what's happening in the Philippines? Does the Philippine economy benefit?
Well, what I'm saying is the linkage is not as strong as, for example, Indonesia, which has a lot of commodity linkages to China. So I think the Philippines is actually quite insulated from that part of Asia.
All right. Ryan Hakim, thank you very much for your time on the Philippines being upgraded by Fitch.